This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today I'm here with Spencer Graff of NFuzed. Spencer, thank you for joining us.
Yeah, thank you, Hall.
Great. So what was your background before joining NFuzed? What did you do before this?
My most recent position was VP, a global VP of finance and operations for an LSX listed company. I was based out of London and managed teams across the country for a translation, or across the globe for a translation company. It was lots to travel and not very much family time.
So what led you to start working in the cannabis space?
It was an opportunity. So in my last several positions, I have been executive at in the mid-cap space, or mid-cap size. And there was an opportunity. There's a growing industry. It's an established industry. I was looking at how companies were trying to cope with the economies of scale when constricted or restricted by state boundaries. And I decided to put my hat in the ring, looking at processes and thinking I could do it better than anyone else.
Well, that's great. So what's your advice for people that are investing in the cannabis space? What do you tell them to do before they write that first check?
Diligence. There is a lot of marketing effort in this space. It is not a catchphrase at all. There's a lot of marketing, whether it's marketing to investors or just product, and not a lot of substance behind the marketing from what I'm seeing.
I see. So how do you see the industry evolving these days? A lot's changing here with COVID, and cannabis is growing tremendously, but how would you characterize it right now?
Growth. A lot of growth. You have it on different angles also. You have, the prohibition nationally will happen eventually. So there's a national aspect that there's a growth play in that. There's states coming online that are either approving medical licenses or adult use / recreational licenses. It seems like in every election cycle, there's more availability of cannabis companies, more consumers coming to the market. There's also consolidation happening in the states that have already been there. In Colorado, so NFuzed has manufacturer licenses in Colorado and California. In Colorado, Colorado was the first state to legalize in the nation. And as a consequence, we're the most mature market in Colorado. We're seeing a massive consolidation happening at the retail level. So that's where the retail chains are, like they start off as one or two chains. Now there's chains that have 21, there'll be 30 strong, 30 store locations by the end of this year. They're also consuming manufacturers. There's just an overall dominance aspect that's happening in Colorado. In California, it's still very segmented, and you don't know who the dominant players are going to be. And this is where going back to your last question on what advice do you have, make sure you understand what the target is of the company, what the target is of the investor's personal goals, and make sure the diligence lines up with it.
Great. So you mentioned growth being a big factor. What is the growth rate of the sector currently?
Again, you have to look at it. Are you investing on a state level, a national level? Are you in California? That's the growth is a very, very difficult aspect to quantify, just because you have a very established black market there. What is the growth for our personal company? We're seeing 30 to 40% month over month revenue growth. What is the industry in general seeing? They're seeing 15, 20%. It also depends on what aspect that you're looking at. Are you looking on flower, retail, full verticals? But at any rate, whatever is your fancy, there's growth at every level within the sector.
And what do you think the impact of COVID was on that growth rate? Where did it take it from and where did it take it to? And let's talk about the legal market for sure.
Yeah. So the national growth rate, you can see BDS Analytics popped out their most recent analysis, and you can see a dip. Everything was cooking along in March, a dip in April, and then kind of return to normalcy on a growth for May, June, July. That's the overall picture. Companies like us actually saw something similar. We were growing at a good clip in March. There's a panic buying, and then April was kind of where people are wondering exactly what was happening. We had a dip in sales, and then things came back. But our company, is actually bucking the trend of cannabis in general, where we are actually growing faster. And it's because our product is superior, our costs are in line with what consumers want. But I can't forget about COVID. There's many of our competitors that have not been able to cope with the long lag time on, or lead time on, purchasing and importing goods, and the extra complications that are associated with operating a facility when you have COVID restrictions and keeping your employees safe. We've managed to navigate these rough waters, and that's why we're ahead on this curve. But I do know several of our competitors who have fallen short and have not been able to supply the market.
Great. And so there's plenty of growth. How many companies are now engaged in it at all levels? You know, the flower, the CBD, the distribution, et cetera. How many companies do you think are now nationally engaged on cannabis?
More than anyone wants to know. That is a very, very large number and a hard one to quantify. You can look up the licenses that are available on a state by state and put it together, but then actually figuring out who owns those licenses. And there's some very large players that have a lot of money behind them out of Florida and the East Coast, whereas on the West Coast, you have more of the homegrown aspect, hundreds and hundreds of companies, from growers to sellers to just, the addition of the SPACs that are coming online.
So what are the challenges in running a cannabis business? You're running one. What do you say your top 3 challenges are? Because I'm sure there's plenty more than that, but what would you put there at the top?
Banking. Banking is truly one of the most difficult aspects of this industry. Banking and IRS's 280E are a result of dealing with or selling a cannabis, which is a Schedule 1 drug according to the DEA. So anything that comes up on a federal aspect is a very, very difficult thing. There's starting to be credit unions and banks that allow cannabis banking. So that is easing some of the stress in more mature markets such as Colorado. A lot of companies are jumping on the banking aspect where we actually have a banking environment in Colorado. In California, it's still very, very heavy on cash. And cash, everyone knows that cash is a very expensive way to carry revenue.
Tell us a bit more about the 280E. What is it and why did they put that on the books? I've never heard of a rule like that before, but maybe you can tell more about it.
280E was actually not a result of the recent legalization at the state level. It's been around for quite some time. Provision that the IRS came out with, or a regulation, I should say, that the IRS came out with to facilitate certain companies to operate, but the intention was to strip all profits out of there. 280E is very strict on what you can and can't deduct for business expenses. To make it as short as possible, 280E allows you to deduct cost of goods sold and nothing else. So on a manufacturing side, that's okay, because the majority of our expenses are cost of goods sold. However, any of our sales commission, any delivery, any marketing is not tax deductible. On the retail side, if you have investors that are looking on the retail side, this is a major, major component because they aren't manufacturing anything. So they're getting hit with 20 to 30% taxes that their counterpart outside of cannabis is not paying.
So I understand they're going to be doing away with 280E in a future regulatory move. And when that happens, people's profit is going to jump up because they're now allowed to recognize that. How do you see that playing out?
Yeah, that's a loaded question. Ask me again in November. It gets tied in with the MORE Act that we hear, or descheduling. There's a couple different ways that Congress can play this, but it all comes down to the scheduling of cannabis. If it's a Schedule 1 or even a Schedule 2, 280E will be alive with the industry. If we get descheduled or even down to a Schedule 3, then 280E is no longer applicable, which is also the same situation with banking. If we get scheduled, if cannabis is all of a sudden Schedule 3 or descheduled, then banking goes out the window and we can start to operate like normal business. How that impacts us, it impacts everybody in the industry as far as cash flow and how you manage your expenses. Right now, because 280 is such a large impact on us, my goal is to ensure that whatever expense we have, it is devoted to a cost of goods sold. So there's numerous decisions I make where I decide not to do a marketing expense because I have to have a higher return on that than I would on the cost of goods side.
Great. So tell us about NFuzed. How do you fit into the overall landscape? Where exactly do you fit in the positioning of it all?
So NFuzed started with the concept of why does it cost so much to get high? When the industry first started, there was a big push to be the best and the most, to have the most amount of bling, spend a lot on your packaging, make it all look very, very fancy. And all this stuff came with a very large cost. I was new. Everybody was excited to buy products legally. So consumers were willing to make that purchase. Prior to us starting in the industry, in Colorado, people were paying between $25 and $35 for 100 milligrams of THC gummy edible candy. After we came in and really shook the market, people are now paying between $15 and $20, and ours are retailing for $8 to $12. We engineered a process that maximizes economies of scale, allows us, guarantees our 60% margins, and allows us to undercut all our competitors while offering a consistent quality product to the end consumer.
Great. Sound like you've got a great product there with a really good price and a very fast growing industry. It must be going pretty well for you guys.
Yeah, we are having amazing amounts of growth right now. We had our highest month in June at $355,000 in revenue. And this month we are going to be coming in between 470 and 480,000 in revenue for the month. So that is a double-edged sword. That growth rate is amazing. However, that does put a crunch on working capital when you're using yesterday's dollars to buy tomorrow's revenue for raw material. So it's a good problem. It's a very good problem to have.
Yeah, it's a good problem to have, as you say. So let's talk a little about the overall impact of COVID that you saw in the last few months on the cannabis space. Some sectors were, positively changed, and some were hit negatively. Can you describe an example of a positive change and then one of a negative one?
Positive change for NFuzed would be what I touched on before, in that because myself and my partner Mark had the foresight of when this was all coming into view to do preparations for COVID before it was required and spend our cash on importing ahead of time, we were able to weather this initial storm, whereas several of our competitors were not. And when they were falling short on not being able to supply inventory, we were right there able to pick up and win customers. So COVID has benefited us on that aspect.
And so what new applications do you think are coming up in the cannabis space in, say, the next 6 to 12 months? What's new on the horizon there for you and for cannabis in general?
Is no shortage in the new ways to consume cannabis. The days of Willie Nelson smoking a joint are fleeting. With every day, there's a new aspect that comes along, and we are actually working on one, bringing it to market that is going to be pretty revolutionary. We have a water-soluble elixir that's coming out where we've taken THC out of its natural state of an oil and we've bonded it with a sugar alcohol. And what this allows is for a water-soluble product. Now, where ours is, there are several competitors that have come out with something similar. It's not theirs. Their process suffers from Ostwald writing, the process of where molecules fall out of the solution and bond to a larger molecule. You can read about that with Aurora cannabis. You can read about that with Tilray. They've had some R&D issues. Our product is no taste, no odor, 0 calorie product that you can mix with anything that is water based. And because it is a sugar alcohol we're bonding with, it's you get more absorption into the body. It's faster, and our platform of it coming out a measured pipette, you can actually microdose down to the milligram on this one. It's so far we've just exited the focus group, our several rounds of focus group, and now we're preparing to bring it to market. And so far, it's we've hit no roadblocks. Once we had the formula, the consumers that have tried it have been over the moon and very excited to get this to market.
Great. Well, through the COVID, how do you find investors changing what they invest in? What new careabouts came up from COVID in this space that investors are looking to apply to cannabis businesses?
I'm not too sure it's wholly related to just cannabis. I think the investor in general went to a safe aspect. There was definitely a drying up of funds, but there was, in the cannabis sector, there was a drying up of funds last fall when VapeGate hit. Before that, we had all the Canadian public pot companies tanking because their valuations weren't good. Then you roll into a pandemic this year and now a recession, and you have investors that are very, very shy. So that aspect is not going away anytime soon. But you couple that with the fact that this is cannabis and attracting new investors. It sounds like a sexy thing to invest in cannabis, but when it comes down to it, there's a lot of people that want to invest through a mutual fund and keep hands off, but still dabble a little bit. I'm seeing that more and more where we are attracting investors. However, they want it to go through somebody because it still got the negative, cannabis still has a negative connotation going through their head.
So in COVID, many businesses were shut down. How does a cannabis company COVID-proof their business so it doesn't get shut down?
Excellent question. Thank you for that one. I can speak to ours, and the way that we set up our process, we were not at risk for having to change our production facility. We invested heavy upfront capital to lower our labor costs. We have we have two 5,000 square foot facilities, and there's only 8 people running around in there. So the distance was not difficult for us. We required masks, but that's not here there. Face protection was already there. Spacing was already there naturally. So for us personally, it was not that big of an adjustment on the production line. In cannabis, the other companies, a good majority of the other companies have a lot of hands-on packaging. In these production lines, they've had to make massive changes to how they work, and really at the detriment of their throughput by spacing out workers it's something that they've had to re-engineer, which has been a massive benefit for us with our budget-focused pricing as is.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think the most important thing is just people get out and investing. This is a very, very fun industry. When people find a nice company that they really like and they take an active participation in it, they will have a lot of fun. The risks are there. It is not a risk-free investment. However, with proper due diligence, investors can mitigate it. And NFuzed is sitting right there with as a beautiful company with our growth rate. Our month-over-month growth rate is very impressive. We're EBITDA positive, where we don't have a runway because we are EBITDA positive. And that's what investors should be looking for.
Well, that's great. So how best for listeners to get back in touch with you?
Find me on LinkedIn or contact me, Spencer@nfuzed.com.
Great. We'll put those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Yes, thank you all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.